Hello, welcome. My name is Suchitra Hammond, and I'm the Senior Strategy Manager here at the Retail Energy Code Company. So, welcome. Bear with me a moment. Just making sure that our slides are syncing and we're all in order. We're ready to go. See, still quite a few people joining, so actually I'll pause and wait a moment and allow more people to join us. Okay, let's go. Already some questions in the chat. That's great. I'll come to that in just a moment. Firstly, some housekeeping. Welcome. It's so nice to see so many of you joining us here today. But as a result of the volume of people attending today, we're going to put you all on mute and cameras off. That doesn't mean we don't want to hear from you. We very much wish to hear from you. So please do use the chat function to speak to us. And please do use Slido. There's the QR code on the screen now. So whichever is your preferred method of engagement, do engage with us. Your feedback and your views, your comments, your observations will be taken into account. We'll be able to collate those at the end. And if we have time, we'll come on to questions. But as you can see, there's a huge volume of you. So please do use that as a method of communication throughout the webinar today. We will be recording today's session. And so if you are happy for your to be part of the recording, great. We will put it on our website post-event. So if you're unhappy with being recorded, please feel free to watch the recording at a later date. Okay, we've still got people coming in. So having done the introduction, I'm going to leave the QR code on in case people want to use that and give everybody a few more moments to join. Okay. Okay, so we're at about 5 past, so let's begin. I'd like to introduce you to your speakers today. I'm very grateful that they could join us. You've got Paul Redmayne, who's joining us from Ofgem, and he'll be giving you a view and an update on the non-domestic market, and in particular, the work that they've been doing at looking at change of tenancies. Really pleased to also have Steve Livins here from the British Brewery and Pub Association, and he brings a consumer voice to us today, what's happening and the impact that it has on their particular field of non-domestic consumers. And finally, last but not least, we have Tim Hipperson from Hipperson Consulting, who has been doing a lot of work with us here at REDCO and looking at the issues around the non-domestic market, and we'll be talking to you about the work that we've been doing on change of tenancies. So your speakers today, I'll be hosting and topping and tailing the event. So what we're going to be covering today, well, as I say, your speakers will be doing the bulk of our work today, but I just wanted to take the opportunity to talk to you about our aims and objectives of the day, what we're hoping to achieve. Also, well, there'll be time at the end to go through some of our next steps and how you can feed into the process. So, the Retail Energy Code Company, we're mindful that some of you may be coming to this new and you won't have had engagement with REDCO or the Retail Energy Code Company. So we thought we'd take a moment or two just to introduce ourselves. We're a not-for-profit organisation, and as part of the license requirement for suppliers, including non-domestic suppliers, they have to accede to industry codes, and the Retail Energy Code is an industry code. It was originally kind of designed to house the faster switching arrangements which were coming on board last year, but as part of the setup of the REC and REDCO, Ofgem took the opportunity to consolidate the retail arrangements that sat in various codes. There were single fuel codes which housed various different retail arrangements. So this was an opportunity to bring it all together and put it under one umbrella. And we're about 2 years old, so it's a new code, and we're about 2 years old. I wanted to draw your attention particularly to our mission statement and two parts of it. One is that we are tasked with facilitating the efficient and effective running of the market, and that includes the non-domestic aspects of it. And also, I wanted to draw your attention particularly to the last point there, which is the delivering positive outcomes for consumers, and that includes non-domestic consumers. So we're tasked with that, and that leads us on to why we're hosting this event today. As part of our strategy when we started Retco was to look at whether there were issues within the non-domestic market that we should be addressing. Were there things that fell within the remit of Rec and Retco, and things that we could be doing to improve either the efficient running of those aspects or other things to do with the outcomes for consumers? So we're very much focused on whether there was something that we could do in that space. And we had set out an initial view that we would do some discovery work to understand what those issues and aspects might be. And to that end, we started some engagement with TPIs, with non-domestic suppliers, with consumer bodies, including Citizens Advice and Energy Ombudsman. And we also spoke to Ofgem, we also spoke to the Government Department, DESNZ, to understand what those issues might be. And what happened as a result of those engagements was that there were issues that people felt that could be identified. And one of them was looking at the change of tenancy. But another aspect of that was that actually standards could be improved if there was an implementation of code of practice, which Ofgem had looked at implementing about 10 years ago. So we picked up that mantle, and we've been working with our stakeholders, and we've had formal consultation. We've raised a change request to implement a code of practice. The good news about the code of practice is that goes live hopefully by the end of today, tomorrow morning. It should be on our website. You'll all be able to see it, and we're really pleased with that outcome. It is an initial process. It's the first step in looking at what else we could be doing in this space, and it is a set of best practice principles. What we're saying is this is what we would like TPIs to achieve. We're hoping that as many TPIs as possible will sign up to the code. We're hoping that our non-domestic suppliers will point their TPIs to this and encourage them to engage with it. Alongside that work, we're hoping to underpin it with an accreditation and assurance scheme. We'll be beginning work on that, much like the work that we did with the development of the Code of Practice, the COP. We will be looking for stakeholder engagement. We will be looking for your feedback. We will be asking you what you think of that process. So it will be, again, something that we engage with. But today, that all said, today we're going to be focusing on one of the other issues that emerged from that early engagement, which was to look at the issues surrounding the change of tenancy. What are those issues and what could we be doing in that space? So, as I say, the objectives of today is to understand what those risks and issues are. We've got an idea of what they are. We're going to talk you through them, but we want to make sure that we have been thorough in our review of those and that we've captured those as holistically as we possibly can. The other thing we want to do is to test our thinking in terms of what those solutions might be. And this is very much the beginning of that journey. This isn't a fait accompli. We're not saying this is the only way to do it. What we're saying is these are the things that we think are the issues. These are the potential remedies, and we want to be able to get your feedback and your input into that. So it's really important that you understand that this is the beginning of that journey. But we are on a short time frame. We do hope that we will be able to raise a change to the REC by the end of this calendar year to be able to implement the remedies and solutions that we're going to be presenting today. But as I say, this is an opportunity for you, our stakeholders, to feed into that process. So we're very much looking to understand what your views are on the proposal we're going to put forward today. So that's the kind of background why we're here, what we do, what we're looking to do. And as I say, today's focus isn't about the code of practice. It's very much focused on the change of tenancy. And without taking up any more of your time in setting the background, I'm going to invite Paul to join us and to talk us through the view from Ofgem. Thanks, Paul.
Afternoon, everybody. Yeah, I'm Paul Redmayne. I'm a senior policy manager in the non-domestic team at Ofgem. What I'm going to do is just spend the next 10 minutes or so giving you an overview of our non-domestic market review, what we've done so far, what the next steps are going to be, and crucially for today, how the change of tenancy process sits within that review. And I'm told I can move my own slide forwards, which is very exciting. So there we go. Just to give you an idea of the timeline, take one step back, as the non-domestic market, as I'm sure everybody here knows, had two fairly major shocks, and so much the COVID and the recovery from it, and then moving straight into the energy crisis. And I think during that time, Ofgem was probably more in reactive mode than proactive mode. And what we've been trying to do, certainly for this year, is to just redress that balance slightly and go into being more proactive. We wanted to understand where the market was, and what our stakeholders felt needed to change within that. So to kick that process off at the start of this year, we published a call for input. We asked people to tell us what the issues they were having in the market were, where it was working, and more pertinently, where it wasn't working. That was published in February of this year and closed in March. We then took all of the responses we had to that, and it published in July our initial findings from that call for input and a policy consultation. That closed last month. And the next two steps from that, we're still sort of finalising exact outcomes of that, but we're hoping to publish an interim update by the end of this month, and we will be moving to statutory consultation in autumn 2023. As you can see there, the last two dates have asterisks on. They are very much what we're aiming towards, but as ever with any government or civil service publication, things can get a little bit tight, but with very best endeavours, they are the two dates we are aiming for. So after that, the call for input and the findings there, we got sort of a couple of fairly major sort of themes in terms of what people were telling us was happening. And I think sort of a lot of the feedback was telling us that the goals that we had for the non-domestic market weren't being met. We grouped them into four sort of main areas, which you can see on the screen there. Fair prices. We were being told that there was suppliers were asking for inflated risk premiums and large security deposits. There were excessive deemed contract rates, and there was some suggestions that there was breaching of government scheme rules happening. When it comes to standards, we were given examples of poor customer service, which included change of tenancy, which is what we're talking about today, and also domestic users behind non-domestic contracts not receiving the service that they would expect. When it comes to a low-cost transition, we were told that capital constraints were preventing investment in low-carbon technologies, and that there was insufficient focus on low-carbon products. And finally, told in terms of resilience, contracts weren't being offered to certain customers or certain sectors, and there was evidence of risk-averse behaviour and an inequitable sharing of risk. So what we're doing now, we will make, as often, we will make regulatory changes where we have to, but there are things we can do that don't take quite as long to get in motion. So where we don't need to consult, we're acting now. We are taking compliance and enforcement action. You may have seen that we recently published that we're taking a compliance case against a supplier for their deemed rates. We're making voluntary agreements with suppliers. For example, we've published security deposit best practice guide, and as we're here today, we're looking at the change of tenancy document rules, which don't need to go through the statutory consultation process in order for us to make a change. There are some things we do need to consult on, and that will be coming out in the StatCon, which I touched on earlier, which is coming out late autumn this year. They are around complaint handling rules, widening standards of conduct, broker commission transparency and broker ADR scheme requirements, and deemed contract rate guidance. third box there as well, mentioned that there are certain things that came out of that call for input and the review, which simply Ofgem hasn't got the diaries to act upon. It's for government, not for Ofgem. That things that come into that category will be expanding access to the Ombudsman, broker regulation, and also looking at support for domestic customers that don't directly contract with their supplier, for example, mobile home residents. Oops, I've gone forward one too many. Just to expand on what we said there in terms of the consultation, deemed rate guidance will be coming out when suppliers would signpost to citizens' advice, and also looking at expanding the rules that only currently apply to micro business customers. You would be a micro business if you're under a certain threshold for the number of employees, the amount of energy you use, or your annual turnover. And mention some of those: complaint handling rules, standards of conduct, and TPI, Commission Transparency and Redress Scheme. The key issue we'll be looking to address in that consultation when it comes out around this will be determining what the right threshold is. The vast majority of responses we got around that question were telling us that it should expand. We just need to decide to what level we take that to. And finally, for me, I'm just going to touch on the change of tenancy as a specific issue, given that's what we're here to talk about today. When we asked that question, the initial call for input, it was great. Everybody agreed that something was wrong. So there was agreement from customers and suppliers that there were issues there. Then when you dig a little bit deeper, it became apparent there was a range of reasons as to why people thought there were issues. From a supplier's point of view, they quite rightly told us that they had worries about a risk of fraud, especially as government support ended and people felt more economically exposed, and also the risk of bad debt in that area, which again, as they pointed out to us, ultimately does end up falling on every consumer to pay. From a customer's point of view, I think the biggest thing that came out of it, there was just simply no consistency in what suppliers were asking for. You could go to one supplier and be asked for one set of documents, go to another and be asked for a completely different one. And in some cases, the customers being asked for documents that had absolutely no relevance to what they were doing. Food hygiene certificates for businesses that had nothing to do with food or drink being one example that was given it. Touched upon the process we go through in terms of consultations earlier. Because the process around customer switching sits within the Retail Energy Code, we realised this was something that we didn't have to go through the full 3-stage formal consultation process with. So we asked RECO to take forward the discussions to agree, of course, at the documents, which is this meeting sort of kicks off that process today. So we're looking to have, ideally, the documents agreed by the end of this year, with a look to having it in place by the end of the current financial year. And we'll also be speaking to RECO as well about increased monitoring, just so we can understand what's happening with the new rules and if they're working or if we need to go any further. Final slide from me is just to say that statutory consultation will be coming out late autumn, which I think technically gives us till the end of November. Very happy to have your input into those if you would like to, but I'm now going to stop talking and pass you back to Sakitra.
Thank you, Paul, and apologies. I think that I do have to move the slides on, so apologies if we were slightly out of sync. I was trying to keep up with you without interrupting you. Sorry about that, Paul, but thank you. That's really useful to hear what your plans are, what you found, because that really chimes with what we found in our stakeholder engagement, and it was really useful to have those conversations with you as we develop this in terms of understanding what those risks and issues were. So thank you very much for coming along and sharing your update with us. Thank you. So I'm going to invite Steve to come along and join us now and talk to us about the consumer voice. And Steve, I'm afraid you're going to have to do your best Chris Whitty impersonation and ask me to move the slides along for you.
Absolutely, no problems at all. Sakitra, thanks very much indeed for the opportunity and for asking us to do this. And as you say, really, I suppose just to give a bit of an insight into the sort of consumer end of the energy challenges that we've seen. Just conscious there's a large number of people on the call and quite a few probably won't understand who the British Beer and Pub Association are. We were formed in 1904, leading trade body for brewers and pubs. We represent companies across the UK. And our members own around 20,000 pubs and brew about 90% of the beer that's sold in the UK. So it's pretty comprehensive. The companies that our members operate have very, very different ownership structures. UK PLCs, privately owned companies, independent family-owned brewers, and UK divisions of international brewers. Probably one of the key points really is the contribution that the beer and pub sector makes to the national economy. The sector generates around 23 billion in economic value, supports 900,000 jobs, and about 85% of pubs in the UK are run as SMEs. Moving on, it really sort of, I think, is incumbent on us just to start with the COVID pandemic because of the impact that it had, not just on our sector, but on many others. But in terms of the beer and pub sector itself, we saw significant numbers of closures or restrictions on pub trading as a result of closures and pandemic restrictions. In 2020, the pub trade dropped by about 50%, and then in 30% in 2021 as a measure of trading capacity, and that translates to about 17 billion pounds of lost trade. If you think about that in terms of that economic contribution, it's pretty significant. Notwithstanding that loss of trade, pubs invested over this period, expanding their customer spaces. The pubs directly invested about £9,000 on that basis, and took on about £25,000 worth of COVID-related debt at the same time. So just to sort of see that direct impact. There was support secured from government and also from those operating companies. And that resulted in only 800 pubs closing their doors for good during the pandemic. The focus has very much been on the recovery and pubs' abilities to bounce back from this period. And whilst we are showing signs of stabilisation, we are still not returning to those pre-pandemic sales volumes, particularly in the case of the graph that you can see here, which although it does indicate an increase in monthly turnover, has to be taken into account of increases in inflation and operating costs overall. Next slide. Oh, there we go. So the pub landscape is quite complicated, and I thought it was probably worthwhile just looking at who does pay the bill, who pays the energy bill in this instance, and it's very much based around the pub model. So we have three main pub models in the UK. Managed pubs. These are where energy contracts are paid by and in the name of the landlord, and in this case, that will be the brewer or the pub company, the operating company. The licensee in this instance has absolutely no responsibility for payment of site utilities. So it is very much down to the individual operating companies themselves. It's worth pointing out that in this instance, where those companies are large and there are a large number of sites, these are high energy contracts that are generally bought using flexible buying models. So the fixed energy contract is not suited to that kind of structure. And this represents millions of pounds. Where we have larger operators, there will be some who offer group energy deals, and this is where the landlord, the operating company, will pay the energy supplier and then subsequently bill the licensee. Leased and tenanted pubs, these are where the energy contract is paid by and in the name of the licensee, who is liable for all of those site utilities. It may be that an operating company will be able to offer an energy deal as part of that process, and to help increase the choice to licensees, and in that sense, certainly over this period of time, increasing choice in where a licensee can secure energy has become a very important thing. Free trade is the opposite side of the pub sector, and these are independently owned businesses. There's no government, there's no operating company support, and as for L&T pubs or managed pubs in any form, and these pubs are also unlikely to participate in any kind of group energy scheme. It's important to make the point that the change of tenancy process impacts on all of these above models. Next slide. So what is the challenge that we've seen with energy? Members have reported to us concerns over energy supply starting in 2020. We saw quite a significant range of issues, but all of these driving up operational costs. We have examples of substantial upfront security deposits, demands for quite a variety of additional documentation for change of tenancy, all of which extends the timescale of the process itself, and which further serves to increase the cost burden on individual businesses and licensees. We also saw increases in minimum credit thresholds or risk premiums associated with contracts, as well as increased out-of-contract rates and prolonged exposure to deem rates during that contract negotiation or renegotiation. That process is one that is pretty consistent going forward. We still see examples of some of those issues. In 2022, we see the wholesale energy prices increase rapidly, stimulated mainly by the war in Ukraine. Operational costs on that basis have risen to unprecedented levels, mainly because the suppliers consider the sector at whole to be a high-risk sector. And on that basis, we've also then seen a dwindling number of energy companies willing to supply pubs, and that has served to constrain the market quite significantly, and we see huge issues with a lack of competition and general sort of decrease in choice available to licensees. We have been representing these issues to government and to Ofgem across 2022 and 23, and certainly as part of the non-domestic market review. Next slide. So as far as support is concerned, we have lobbied for government support in 2022, and we're very pleased to see the EBRS, the Energy Bill Relief Scheme, coming through. The EBRS was launched on the 1st of October and provided support to all non-domestic energy users. Prior to the EBRS coming in, we were seeing energy bills increase by around 150% on average. Although that EBRS did provide support, with that introduction, we have still seen those energy prices increasing, energy bills increasing, largely as a result of an increase in non-commodity costs, but also because energy wholesale costs were similarly increasing at the same time. The key with all of this really is that, and you can see from that graph that the extent of that peak in the sort of tail end of 2022, many licensees signed longer term contracts at around that point. And the introduction of EBDS as the successor to EBRS was around a significant reduction in the level of support to licensees, which left many vulnerable against the backdrop of those steadily increasing wholesale prices versus retail prices that were being charged for contracts at the same time. Our experience of EBRS, a mixed experience. Broadly speaking, I think helpful in relieving cost pressures related to energy, but the question remains: could this have gone further? The sorts of issues that we saw with EBRS were inconsistency in the way that discounts were applied and communicated to individual businesses, disproportionate increases in non-commodity costs, particularly standing charges, in which we still see at a significantly elevated rate today. A lack of transparency over the makeup of bills and the difference between commodity and non-commodity costs. And although we saw this in a minority, there was also a delay or a failure to apply that discount by some companies. As I noted in the previous slide, although we had this initial level of support with EBRS, the reduction in support with EBDS left those companies in a very vulnerable position. We've had numerous conversations about blend and extend style contracts being offered and an ability to sort of soften the cliff edge, if you like. We still see very few of those contracts available to pub businesses, and particularly those that signed when those wholesale prices were at their peak in 2022. So what are our ongoing challenges? We continue to receive quite a lot of reports of high non-commodity energy costs and a significant reduced pool of energy suppliers available to licensees. The change of tenancy process really for us is one of the most significant concerns that we have. And in that sense, we still see a continued request for quite extensive documentation, with some of those examples being quite difficult to justify, and Paul noted a few of those earlier on. We have had some then recent feedback from members that some suppliers have been refusing to accept legal documents that are common within the industry, tenancy at will and license to occupy documents. There is an overly lengthy process with change of tenancy still in place. At the moment, this is taking around a minimum of about 2 months to process, but there are reports that come through of this process taking up to and longer than 27 weeks. We have issues with the application process itself. It's an inconsistent process, and it's difficult to speak to suppliers to resolve issues, particularly where the only contact is through online portals. And overall, we find there still is a lack of clear and consistent methodology in setting out retail pricing around out-of-contract rates and deem rates. Just a sort of final look at where we are at the moment. And whilst we see and recognise and I'm pleased that the wholesale energy prices are falling considerably, and that there is that much more positive outlook for this winter, we are conscious that 15% of hospitality businesses report that they do remain at risk of failure within the next 12 months, and 96% of those report that failure is likely because of a significant increase in energy pricing as a risk factor. Further to that, we have data from the insolvency service that shows that there's been a steady increase since Q3 of 2022, which is largely down to increasing energy pricing and other cost inflations. And for the first half of 2023, pub insolvencies were at their highest level for over a decade. So we're very keen to work collaboratively with government and Ofgem, with suppliers and other stakeholders to address these challenges, and to work on making sure that the non-domestic energy market is both fair and functional. Thank you very much.
Thank you, Steve. That was really, really informative, and so important to hear what the lived experience is for consumers. And you know, you've given a particular spotlight for what's happening in your sector, but I should imagine actually this is very similar to a lot of sectors. A lot of non-domestic consumers are finding exactly this kind of scenario where they've got these ongoing challenges, and it's sad to see that businesses are closing as a result of potentially their energy consumption rates going up. And I'm sure it's not the only factor that drives them to that. As you pointed out, there's a number of factors that lead to businesses struggling at the moment, but it would be really helpful for consumers, not for non-domestic consumers, not to have the additional burden of challenges with change of tenancy. So it's a really important spotlight that you've shone on that today, and we wanted to make sure that voice was not, you know, just a reminder for the people in the room that actually this is why we're here, these are the impacts that it's having. And it was a very comprehensive view of what that market is facing at the moment. So I really appreciate the time that you've taken, and that was very thought-provoking. Thank you. Thank you. So I'm going to invite Tim now to join us and to talk us through what we've been doing in our space in terms of looking at the change of tenancy issues and what we think we're going to do in that space. So I'll leave Tim to introduce himself and to take over this next section.
Thank you, Saticha. Good afternoon, everybody. In this section, I've got about 45 minutes, and I'm going to take you through a couple of things. First of all, the risks and concerns that RETCO have identified as being part of the change of tenancy process, many of which you've already heard from Ofgem and then again from Steve a moment ago. Then we're going to look at the remedies that we hope will mitigate some of those risks and concerns, and then the process, the draft process and draft SLAs that will sit behind that. We're going to start, as the slide says, with risks and concerns, and in this section we're just going to take you through the market, the market risks and process concerns that RETCO have identified during their initial engagement piece. The risks can be best described, I guess, as the negative impacts on the market that the current COP process is allowing to happen. And the concerns could, again, probably best described as the reasons why the process is allowing this to happen. As Suchitra has already mentioned at the beginning, none of this is definitive. This is certainly not a definitive list of risks and concerns, but what it is, the culmination of work undertaken by REC via stakeholder engagement, the interrogation of the consultation responses we've seen, discussions with industry groups such as Steve and the BBPA, and also in conversation with the regulator. These are important, the risks and concerns, because essentially they will drive the remedies. The remedies will be aligned to those risks and concerns, and the remedies we'll talk about in a moment. The guys at REC are keen to hear from you on some very specific points as we go, and we'll get Slido open at certain points to ask a couple of individual specific questions. REC will also have a formal feedback route with some very specific questions about what you're going to see in a moment. And Suchitra will at the end give you details of how to interact with that formal feedback route and the questions that we're going to look at. So if we look at the risks first, you can see on the screen there the sort of 5 key negative impacts on the market that have been identified as a result of the COP process. I'll just take you through them one by one. So the first one we can see there is that REC have found that the COP process is being exploited to essentially exit business consumers from live contracts. We've seen manipulation of company details, of ownership and occupier status, and as I say, that is allowing the COP process to be used to exit businesses from live contracts. The second piece is losing suppliers objecting to the COP transfer on spurious grounds, essentially. We know that losing suppliers can object to the transfer under REC Schedule 23, I think it's clause 6.3. However, some of the objections identified have not been made in line with those requirements, or really in line with the energy supply license. Number 3, the gaining supplier is accepting COPs without evidence of legitimacy being gathered. REC Schedule 23, again, this time I think it's clause 2.7, states that the supplier, the gaining supplier, shall retain the evidence to substantiate the belief that the COP is legitimate. And there's some concerns that without actually obtaining that evidence, the supplier may be accepting COPs that are illegitimate or incorrect. Number 4 is that we're seeing reports of unacceptable length of time to complete the COP process. Steve just said 27 weeks, and that is an incredibly long time. And both the gaining and losing suppliers are taking extended periods of time to complete these change of tenancy processes, leaving businesses, as Steve already mentioned, on extended periods of deemed rates. And lastly, we're seeing an increase in transfers being blocked on the grounds of debt. Conditions for debt transfer objections are laid out in Licence Condition 14.2, but some of the things we've seen suggest that they are not always being followed correctly. So why is this happening? So, teacher, if you could just move on to the next one. These are essentially the 4 key areas of concern that REC have identified as driving those market risks. We have a lack of clear definition of a COT, leading to inconsistency. So we found that without clear definitions of when a meter transfer can be made under the COT process, we are seeing some transfers being accepted that are not COTs, while others are being blocked that are COTs. So there's no clear definition of what a change of tenancy is. Running alongside that is that there's a lack of clear definition of the evidence requirements. Again, repeating what Steve and Paul have said. We've heard the words unreasonable, inconsistent, impossible to comply with. These are some of the phrases used to describe the evidence being requested to substantiate the validity of a COT. And the variance of those evidence requirements is leading to, an elongated timescale for switching, again, leaving the customer at financial detriment. And then lastly, we have a lack of clear definition of the reasons why or when a COT could be objected to. Again, this all goes back to leads to inconsistency in approach, inconsistency of use of objection. And again, this leads the customer on deemed rates for too long a period of time. So, Chichi, if you can move to the next slide, please. So, REC spent some time over the last few months, as you've heard, understanding what these market risks and market concerns are. And in response, they've drafted some remedies that they believe will ensure that the majority of COT instances will occur with less friction and with more speed, reducing inconsistencies in processes, expediting the meter transfer and reducing the time consumers spend on deem rates, and therefore reducing some of the financial detriment that we see occurring. So teacher, if you could just move to the next slide, please. So what we see here are the 4 distinct draft remedies, the headings of the 4 distinct draft remedies. We have the development of clear definitions of change of tenancies, development of clear definitions of the acceptable evidence requirements aligned to those change of tenancies, the establishment of clear SLAs for the transfer timescales, and that's linked to a clearly defined process, and some clarity on the losing supplier and when they can and cannot object. I'm going to go into all of these in more detail in a moment. So teacher, next slide, please. But by implementing these remedies, we expect there to be, as this slide shows, no ambiguity about the COT definition, no ambiguity about the evidence requirements aligned to those definitions, no ambiguity over the objection logic, leading to faster change of tenancies, simplified and standardized processes, again, leading to better consumer outcomes and reduced transaction costs. Just to clarify, these slides will be made available to everybody after this event, so that you can feverishly write this stuff down. Next slide, please, teacher. So the remedies. Let's look at these in a bit more detail, starting with definition of the COTs themselves. So these are the instances where a COT transfer can take place. Again, really, really important to say that 2 things here. One, this is not a definitive list. Okay, this is just our starting point. And we'll be asking the question as part of the formal feedback as to whether we have captured them all and what additions need to be added to this list. And secondly, these are not legal definitions. They've not been written as legal text. These are simply broad parameters of definitions of where a COT transfer can occur. So teacher, if you please, the next slide. So we have a number of definitions on the screen here. There are 5, and then there's an other box, and we'll talk about the other box in a moment. As previously mentioned, as part of the formal feedback, we're going to ask for your views on these definitions and views on any definitions we have missed or any amendments we might need to make. But in broad terms, we're looking to capture new occupiers. So the new occupier would be defined as a business that is a tenant or leasee under a new lease at the property where the meter point is situated, and that did not previously have a legal relationship with the losing supplier for the same meter point. New owner, this is a business that is the legal owner of the property where the meter point is situated, and that did not previously have a legal relationship with the losing supplier for the same meter point. A return to landlord or revert to landlord, and this is when a tenant leaves the premises and the premises returns to the landlord for management. Often this will be under empty occupancy. We have a change of legal status. Again, this is when a business that's changed its legal status from a sole trader to a limited company, and where the sole trader transfers the lease and other assets of the business into the company, of which the sole trader becomes one of the directors. We have a change of registered bill payer. Now, this is an interesting one. So this is where a business who has taken ownership of paying the utilities contract at the property where the meter point is situated. This is only a valid change of tenancy where the previous bill payer that had the legal relationship with the losing supplier is no longer situated at the premises or ceased trading. So to clarify that, if you have more than one business registered to an address, the transfer under change of tenancy is legal if the business that currently has the relationship moves out of that address or goes into administration, is no longer situated at that address. Otherwise it's a novation between one business to the other if they're still both situated at that address. So that's the change of the registered bill payer. And lastly, as we say there are others. We are very aware that there are examples of COTs that are not as clear as those noted here. For example, we know about rights to occupy in the franchise space, for example. We're also aware of head lease and sublease arrangements, and we are talking to people like the British Landlord Association and others to get a much more detailed understanding of those other types of change of tenancy. And we're going to provide more detail as we progress through the retro review. The focus, as we said, is on the most common on the most common type of COT, but this is going to be open to revision as I say, as we go through this process. So Chitra, the next slide, please. As well as clarifying the occasions that do constitute a change of tenancy, we were wondering whether we need to outline some examples where they do not. So we can see here on the slide, there's some examples. We have a change in registered bill payer occurs, but the previous bill payer is still operating out the address and shares the same directorship as the new owner occupier. A sole trader changes their business name, or a sole trader forms a partnership. A partnership takes on another partner. A limited company changes directors, or a partnership breaks up and one of the partners continues running the business as a sole trader. And so there's some examples of when transfers are not COT transfers. And one of the things REC wanted to ask, can you just move on to the next slide, Chitra? So one of the things that RECCO wanted to ask was whether or not you as stakeholders would want to see a list of situations that do not meet the threshold of a valid COT included as part of the guidance. If you go on to the Slido app or you use the QR code, there's a simple question there. It's a yes or no question, I believe, is whether or not the definition of COTs, of valid COTs, is enough, or whether we need to provide in guidance some examples of COT transfers that are not valid COT transfers. So I don't know if you can all go onto Slido and if you can have a look and just give us your thoughts, because that will. Okay, so I'm just having a look at the responses so far, and we're seeing overwhelming support for the provision of examples of COTs that do not meet the threshold. So 95% of people who are responding by the Slido app are saying that they would like to see some guidance added of where COTs are, of where transfers are not valid for COTs. So that's really interesting to hear. So we're going to have to take that away and do some work on establishing not just the definitions of what a COT is, but also providing some guidance of where a COT isn't. That's great. That's really good to know. So thank you very much for that. Let me just check the finals, because I think you can probably all see that yourself as well. So yeah, 95% of people said yes, and only 5% of those respondents has said no to that. That's really interesting. That gives us some more focus when we build the guidance document. So Chitra, are you able to move on to the next slide, please? Okay. So now we're going to take a look at the evidence requirements. So the way that we are drafting these remedies is that each COT definition will have a defined set of evidence requirements attached to it. This isn't unfamiliar. This is the similar sort of process that people go through for proof of ownership under business rates or setting up bank accounts. We see it in the water contracting space as well. So it's quite a recognisable process to attach defined evidence list to a requirement like this. So we're just going to go through some of these evidence bits now. So Chitra, if you don't mind the next slide. The proposed approach sets out essentially a two-tiered system. There is a primary list and there is a secondary list. The primary list is you need we request one piece of evidence from the primary list. If the evidence from the primary list cannot be gathered, then we are looking for two pieces of evidence from the secondary list, referred to in these slides as level 2. As I mentioned a moment ago, this is a recognisable type of process that we see in other areas: council tax, business rates, bank accounts, etc. You see there that it says water supply contracts and landlord tap is inverted commas. Landlord tap is an online system that allows water companies to understand who should be paying the bill at a particular premises. So we're taking some learnings from that system too. Okay, if you don't mind, Mr. Chitra, then please, the next slide. Thank you very much. We'll just look at these evidence. I can see some stuff happening in the chat. We'll pick up the chat stuff at the end of the presentation if we have time. So if not, we'll certainly take some of the stuff away and respond to the queries. Let's just look through some of the evidence requirements, and we'll review some of the chat stuff later on. We've got, for the new occupier, we have under level 1 evidence. Reminder, the new occupier is the new tenant or leasee, is a signed lease agreement, signed tenancy agreement, or confirmation from the landlord of a change of tenancy on headed paper. That'd be a level 1 evidence. One of those things would be required. If we do not get, if you cannot get the level 1 evidence, then 2 from level 2, being either the confirmation from the estate agent handing the move on headed paper, confirmation of business rates being registered to business in the business name at the address, copy of utility bills, copy of confirmation of business bank address change, or copy of any building, public liability, employees liability insurance in the business name at the address. For a new owner, again, this is the new legal owner, the person who acquired a premises, a level 1 type evidence requirement would be a copy of a title deed with the owner's name present, copy of the mortgage completion certificate, or confirmation from the solicitor handing the move on headed paper. Again, we know that this isn't necessarily a definitive list. This is the starting point, so we will be seeking your feedback. I can see some stuff coming up in the chat, so this will be Retco will be asking for your feedback on these things. We don't by any means believe it's definitive at the moment. This is the draft process, the draft remedy process. And again, level 2 evidence, if you can't provide one of the level 1 evidence, level 2 evidence is, again, as before, confirmation of the estate agent handing them the acquisition, confirmation of business rates registered in the business name at the address, utility bills, the confirmation of the business bank account change, copy of building, public liability, employees liability insurance relating to the business name at that address. So teacher, if we can move to the next one. Okay, change of legal status. So under change of legal status, there really is only one thing that can demonstrate that, and that is a copy of the certificate of incorporation. Under a change of registered bill payer, if the previous bill payer has gone into administration, then we'll need a letter from the administrator, or if the previous player is closed down, then copy of proof of application to Companies House for the company being struck off, or copy of proof from Companies House that they have ceased trading, or copy of proof that the company appears on the Gov.uk insolvency register. If one of those cannot be found, then we move on to level 2 evidence, which is confirmation of business rates registered at the address, utility bill and business's name, copy of confirmation of business bank account change, and copy of building public liability employees insurance as before. And lastly, if we look at the next slide, please, teacher, is if it reverts back to the landlord, any one of the following, which is a copy of the title deed with the landlord's name present, copy of mortgage details with landlord's name present. Again, there may be others that we need, and we're working with the as I say, the British Landlord Association to understand what they might be. And then again, level 2 evidence, a copy of utility bill in the business name at the address, copy of the building public liability or insurance documents, or a copy of the lease surrender document. So this is the suggested process. Define the COT type and then request the relative evidence, and that will determine whether or not the COT is valid or not. It'll be a standardized approach, standardized level of evidence requirements, and standardized level of COT definition. So that is the broad remedies in terms of the evidence requirement. So teacher, if you don't mind, could you move on to the next slide, please? So how does this work from a process point of view? Again, Retco designed a draft process that will be standardized across the industry, and will have attached to it certain SLAs. So teacher, if you move to the next slide, please. So the process, what REC have done is they've designed a RAG rating for the COT for the COT transfer. And we'll look at what the RAG rating means in more detail, but essentially the RAG rating is do a couple of things. It will protect the gaining supplier, as the process allows for clarity on the genuine nature of the change of tenancy and stops objections where objections should not occur. It protects the losing supplier, as it allows for the proper investigation of the COTs where there is an element of doubt. And it also protects the consumer, as it places SLAs on suppliers to complete certain activities within a clear time frame, minimising exposure to deemed rates. These SLAs and process, as I mentioned before, are all in draft form, and we'll be asking for your feedback on these as part of the formal feedback request, which the teacher will go through in more detail later. And I can see in the chat function that there are some questions already being raised and some concerns already being raised, so that's great. Before we look at the draft process, just some clarity on the RAG rating. So teacher, if you don't mind, the next slide. So these are the definitions of the RAG rating. Let me take you through one by one. So the green route is where the gaining supplier requests the required evidence to support the COT, and the customer provides all of it correctly. The supplier will then need to raise the COT flag and make the transfer request. If the COT flag is raised, the losing supplier will not be able to object to the transfer because the gain supplier has done their due diligence on the evidence validation. Now, obviously, if it's taken down a green route, the gain supplier will have to retain that evidence because it could be subject to performance assurance later on. So again, there'll be requirements for them to retain that evidence. So only if they're sure and the evidence is validated should they raise the COT flag and take it down a green route. If it moves down the amber route, the gain supplier requests the required evidence to support the COT, and the customer can only provide part of it, or they cannot supply any of it, but the supplier has a strong reason to believe that it is a genuine COT. The supplier can make the transfer request, but does not raise a COT flag. Under these scenarios, the losing supplier can object to the transfer. And we'll look at the reasons for objection and the rejection process in a moment. And lastly, under a red route. Under a red route, the gain supplier requests the required evidence to support the COT, and the customer cannot provide any of it. The gain supplier believes that the transfer is not a COT and cancels the meter transfer request. So that's the RAG route, defined RAG routes that have been is going to be used as to implement the remedies that REC have suggested, or the draft process to use. Let's look at the process in more detail now, Suchitra, if you move on to the next slide. This is the process in full, the end-to-end process. I know you can't see that very well, so we're going to, can we zoom in, Suchitra, on the next slide? We'll take it step by step. Thank you. So the first part of the process is to determine what type of COT it is and request the evidence and validate the evidence. So we go from process from left to right. The customer or the broker requests the change of tenancy, and the supplier then identifies the type of change of tenancy it is. This may be requested, the definition of the type of tenancy may be requested at the point the application is made. Once we know what the type of the definition is, the evidence request will be made, and then we see the first draft SLA come into place. There's going to be a required time frame to validate that evidence. And the suggestion here, and again, this is open for debate and will be part of the formal feedback, is that there'll be a 5 working day SLA for the validation of the evidence. So this is from the point the evidence is received, the gain supplier will have 5 working days to validate the evidence and then decide which of the 3 routes it will take the COT transfer down. So teacher, if you can move on to the next slide. So based on those responses, based on the evidence provided, the gain supplier will then make a decision. Do I take them down the green route, where all of the evidence has been present and we're very comfortable that it is a genuine COT? Do we take them down the amber route, where some evidence is provided, we believe that it's a genuine COT, but some further investigation may be required? Or do we take them down the red route? We do not believe it is a COT. If it goes down the green route, so Suchitra, if you could just move on to the next slide again. If we go down the green route, the supplier raises the COT flag, and then at the point the COT flag is raised, it falls into the faster switching arrangement for the transfer to happen within 5 working days. And the supplier cannot object. Graham, I just saw your question flag up. What triggers the 5 working day SLA? The 5 working day starts the moment the evidence is received. So if the COT flag is raised under a green route, the losing supplier cannot object because the belief is the gain supplier has done their due diligence on the evidence and is clear that it is a genuine COT. Again, this is all subject to performance assurance through the RECCO path. So evidence must be kept. There must be confidence that this is a genuine change of tenancy. So 5 working days to validate the evidence from the moment you receive the evidence. And then once your decision is made at the end of those 5 working days, if you do the green route, you raise the COT flag and you have 5 working days to transfer the meter as you would do under the faster switching arrangements. So teacher, if you can move on to the amber route, please, one slightly more complex. So under the amber route, the change of tenancy meter transfer is put through, but there is no COT flag raised. Under this route, the losing supplier can object within 5 days of the transfer being applied for. There's a 5-day objection window. Now, if the losing supplier does not object, then it just goes through and the transfer is completed as required. If the losing supplier does object, then it falls into the 3rd SLA. So this is where we're going to seek some feedback again, obviously, and we're going to ask a specific question about this in a moment. But we're suggesting here that the losing supplier has 20 working days to validate whether or not the person applying for the COT is the organisation that they have a current established legal relationship with. So that if they object to the transfer, there's a 20-day SLA, 20 working day SLA placed upon the losing supplier to decide whether or not they have a current legal relationship with that customer, and that the objection should stand. The idea here being is we put an SLA on that piece of work, we don't have the kind of scenarios we've seen that Steve spoke about a moment ago, where we have 2-month, 27-week of businesses on deemed rates waiting for the decision to be made on whether or not the meter transfer can occur. We place an SLA on the suppliers to the losing supplier to validate and understand whether or not they already have a legal relationship with that customer. Now, does the evidence they gather support the objection? If not, it falls back into the game supplier to complete the transfer. If they do believe they have an objection, the transfer is cancelled, and the evidence is held by the losing supplier to validate that objection. So, teacher, if you can move on to the final one. So again, on the red route, the gaining supplier believes, no, this isn't a genuine COT. They end the transfer and the transfer there. Okay. So that's the draft process that Retco are putting in place to support the remedies that they've drafted. The process will have distinguishing codes, so we can so Retco can determine which route the switch went down, and the COT transfers will be subject to sampling and assurance, with breaches being dealt with accordingly. And we met with the performance assurance team yesterday, and we'll come back with more details around what that will look like. But this will be a requirement mandated upon all suppliers to follow within the REC schedules. So, teacher, if you can move on to the next slide, please. In terms of transfer objections, some clarity on what a transfer objection looks like. When a meter switch occurs via the amber route, the losing supplier, as we've already stated, can object. The losing supplier then has to confirm whether the customer meets one of the COT definitions, and if they believe they do not, they're required to gather the evidence that supports this. So within this 20 days, in order to object to the switch, the losing supplier must believe that the person claiming to be the new owner or occupier is the business with whom it already has an established legal relationship, and that the belief must be founded on some new evidence available to the supplier that supersedes the evidence the gaining supplier has been provided, and which evidence would be likely to lead an impartial third party to the same belief. As per the current REC schedules, the losing supplier must keep the evidence they have relied on for the objection for 12 months. The losing supplier, as we in this draft SLAs, will have 20 working days to establish the validity of their objection. So we're trying to put some rules around what can be objected to and why and when it can be objected to. But again, we will seek feedback on all of this. This is purely the draft process we put in place based on the remedies that we've identified. So, teacher, if you the next slide, please. So, bringing this Slido back up again, we have asked the question: do you agree that the 20 working day SLA is sufficient to investigate the validity of the COT by the losing supplier? Now, I think you'll have three choices: it's too long, it's too short, it's just right. Sort of the Goldilocks question. As part of the formal feedback, we're going to ask you this question again, but give the ability to expand on your answers and give some reasons why you think certain things. But if we can go to Slido and we're looking for, is this too long, too short, or just right? I'll be interested to see what we come back with. As I said, we'll be asking this in the formal feedback, and the question will give you the opportunity to expand on your beliefs. So it's actually relatively even so far, in that, right, I'm looking at it as we're moving on. In fact, it's exactly even. 41% say it's it's shifting all the time. So as it stands now, we've got 45% of people saying it's correct, 18% saying it's too short, and 37% of people saying it's too long. So yes and too long is where we're looking at. Not a huge amount of people suggesting it's too short. As part of the formal feedback, as I say, we're going to ask for you to expand on your thoughts on this, and where you think it is too long, present your reasons why. Where you think it is too short, to present your reasons why as well. This will then allow us to establish whether or not that 20 days is the correct number of days or not. Go on to the next slide. Bear with me 1 second. There we go. So, teacher, are you okay to move us on to the next slide? So, teachers now, I'm going to hand back to Suchitra, who's going to take us through the feedback and the next steps. So these formal questions that we're going to ask and the next steps that Repco are going to go through. So Suchitra, I'm going to hand it back to you, and hopefully looks like we might have some time to go through some of the chat questions as well. So thanks very much.
Thanks, Tim. That was a very comprehensive walk through our early thinking. I will come back to the questions because I think we've got time today, but we're not going to propose to answer them all. But firstly, we want your feedback. We want to be able to understand what your views are on this. And as I say, this recording will be published, so you'll get a copy of all of this, and you'll be able to look at the slides and digest them and take feedback where you need to. So what do we want to do? We've got some specific questions that we want you to go away and ask yourselves and come back to us with. So firstly, do you agree with the definitions that we've put in there? Is our draft of the COT definition list extensive enough? Have we missed anything that's really obvious? You know that there's another pot that we are looking to develop, and they may not be in place on day one, but is there something there that we should be really thinking about that we haven't done? So we've got a other pot that we're looking at, but given that we've got those 5 defined ones, is there something else that we've really missed that should be up front in there from day one? Second question we've got is, with the evidence requirements, do you think the consumer is able to provide them? Are they fair and obtainable? Is the list comprehensive? Is it fair to have that? The third question is about that first 5-day working SLA, and we've already seen some of the views coming into that on the chat, but is that enough time for the gaining supplier to validate the evidence, given that it should be coming from that agreed list? Should that be enough time for you to validate that and decide whether this is going down the route of it's a green, we're happy with that? Is it an amber? We've got some questions. Or is it red and we're just not accepting it? So does that first 5 days give you sufficient time to choose that before you go into the formal change of tenancy process itself? The next question is, okay, if we're in that position where we're unsure of the evidence, do you think that 20 working day SLA for the objection validation from the losing supplier to be enough time? If not, what do you think might be the appropriate time for that? And finally, the last question is, do you think that the approach that we're taking will actually move to improve the change of tenancy process and therefore improve outcomes for the non-domestic consumer? So we want to understand whether you think this addresses the risks and issues, and we'd be really pleased to get all of your feedback on that. We will be, as I say, publishing this so that you can see this. So what does that time frame look like? So today is the workshop, and we'll be publishing our good practice, as you know. We'll be asking for your feedback by the 17th of November, so hopefully that gives you sufficient time to go away, digest what we're saying, and prepare your responses to us. So we will put these questions out and you'll have your opportunity to respond to us. We hope to share our draft legal text by early December, so by around the 8th of December we should be able to share what we think that looks like, and hopefully by the 19th of December we'd be able to raise the draft change proposal, and there will be obviously consultation that goes with that. So hopefully those questions are clear, and we'd really welcome your feedback, and for as many people to be involved in the development of this thing. It's really important to understand that actually this is isn't a fait accompli. We're not saying this is definitely the right way to do it. We think that we're on the right track, but your feedback is really important. I think the other thing that's coming out of the questions, and I know this is the first time a lot of you are seeing these proposals, but this is, as I say, the beginning of that journey. This is your opportunity to feed in, so please don't feel aggrieved that you haven't been contacted before we came to this presentation. We did as much of our think as we could do, and a lot of this actually came out of the work that Ofgem have done in understanding the issues in the non-domestic market, and also in our discussions with stakeholders. So those early webinars and workshops that we ran earlier this year, a lot of the things with change of tenancy came up again and again, and these issues came up again and again. So hopefully some of the things that were raised in the chat themselves, like the timeframes questions, have been answered in terms of what our thinking is. But we'll see what we can do in terms of picking up any more of the questions that we've got at the moment. So let me see if I can pull together some key themes that were coming out of the questions and see if there's anything else we can do. One of the other questions I know is around stakeholder engagement, and we were due to have something like 240 people at this talk today. So it just shows you the volume of engagement that we have got. Lots of people are aware of it, are engaging with it, and are signing up to listen to us. But that doesn't mean to say we're complacent about this. We're trying to reach as many groups as we can. We've spoken to the Energy Ombudsman about how they could perhaps use people to use their website to promote some of the work that we're doing. There's always updates on our website. We use LinkedIn wherever we can. We've had retweet so that it's reaching the TPI market, and we'll be happy to talk to anybody. So this is an opportunity to engage with as many people as we possibly can, and it's a huge sector out there for us to reach. So if you can pass on information, if there are other things that you think we could be doing, we'll always welcome any help we can get to make sure that we're reaching the right stakeholders. So let me see if I can perhaps bring Tim back on with me to help answer any of our questions. I might stop sharing so that you can see us more broadly. Hopefully you've got that email link there, and as I say, we'll be publishing this so you'll know how to contact us. I stop presenting, so you'll have to bear with me while I try to juggle the potential questions that have come in, and Tim and I will do our best to try and answer some of these. A lot of this, I don't know if Tim, you've had the chance to digest some of this, has been around how suppliers are feeling that actually they could have put more into this, but actually around the how do they address some of the risks that they've identified, particularly around fraud. They've got a lot of concerns around that, and I can see that TPIs are raising concerns around how long it takes to process these, and they're things that we heard in our early engagements with stakeholders, and there are interesting points. But I don't know if you had any views on those particularly.
The introductions of the SLAs are there to put some parameters and some definitives around how long these things should be taken. Anything that falls outside of the SLAs, again, will be subject to review and performance assurance. And as we said, these will be, I'm not sure what the words we use, but they will be looked at and checked, and there will be identifying factors on transfers that are made by the COP process, so they can be picked up and looked at and sampled. In terms of engagement with suppliers, I think that's right. This is purely what we have found from the engagement we've done so far. As Suchitra has said, this is not a definitive set of rules. This is an opportunity for the REC team to present what their findings to date have identified, but we definitely want more feedback to enable us to refine this and make it workable. The important thing is it needs to be workable and it needs to be achievable. The bit around fraud, yes, fraud of course has been part of the thinking when we talked about the change of tenancy being exploited to remove customers from live contracts. That was the #1 issue. When you receive the slides to review, you'll see that was the #1 issue. And short of calling it fraud, that's exactly what we're talking about when we look at that. We're talking about the system being exploited to remove customers from those live contracts that you have with them, and how if we can ensure that there is a clear definition of a clear set of evidence requirements that sit behind that, we will minimise those instances of fraud. I don't think we'll ever be able to get rid of them altogether, But I do think if we start putting some rules in place and some clarity around what is required and some consistency around what is required, the ability to circumvent and exploit the process, a process which at the moment is quite flimsy, then we should see a reduction in those fraudulent cases. But again, we need to have some more feedback from you guys based on what you've seen today for us to understand whether or not the remedies put in place, the processes, the SLAs are going to achieve the outcomes that we want.
I agree with you, and actually, I've just seen say that actually both from suppliers and TPIs, and I think that's absolutely correct. But also, he adds that actually we need to ensure that the outcome is efficient, fair, and equitable to all parties. And really, actually, that tells what we're trying to do here, and that really is the sentiment that we want to get across, that actually we recognise we're not trying to point fingers at saying this is all the fault of TPIs or this is all the fault of non-domestic suppliers. You know, this isn't a finger pointing exercise. This is saying, look, there are issues to make sure that actually this improves outcomes both for the people who are supplying the energy and for those people who are arranging the energy, and ultimately that this improves for consumers who are also a big part of this. So sorry, I hope my sound isn't breaking up. Is that better?
Yes.
Is that better?
Yeah,
yeah, sorry about that. So yes, the point is that this isn't a finger pointing exercise, very much about looking at how can we resolve the issues that we all know exist in this market, and how do we make sure that the outcome that we get, the solutions that we apply are absolutely fair and equitable, so that there's reduction of this kind of disadvantage that people have or perceive to have in this space, and ultimately what's going to improve things for the consumers. And somebody's also put in here about the responsibility on the consumer. Absolutely, there is a responsibility on the consumer to act quickly, fairly, to produce the documents and to aid their process to help themselves. I think that's a really important point to note as well.
We've had, I think Martin mentioned in the chat there about, are we accepting that the gaining supplier and losing supplier may very well be the same party? And of course, the process will still be followed in the same way, but of course, that we'll look at it, making sure it works for the gaining supplier being the same as the losing supplier. I think that's a very good point. There was a question here from a pub landlord, which I've missed, around talking to suppliers to arrange a change of transfer. I'll try and dig that one out. While I'm looking for that, teacher, is there anything else that's caught your eye?
I'm just also having a flick. They're very active in the chats, which is great, but it's quite hard to navigate them all in one go.
Go back to the top.
Yeah.
Okay,
really pleased to see your comments, by the way, while you're having a look, Tim. We will be taking all of these on board. We will be collating them, and I know that Jenny's been in the chat actively telling you that that's what we're going to do, but we really will be taking these away, looking at what the themes are that are emerging and seeing what we can do in that space. And I hope that gives you all some reassurance that that is what we intend to do, and this isn't a closed door, and you can come and chat to us if that's what you also wish to do.
Another point here came up was that whether there's going to be some rules around the deemed rates that can be charged while the COP process has been agreed. I think Paul, I'm not sure if Paul's still on the chat from Ofgem, but Paul mentioned there was some work being undertaken on deemed contract rates. So we'll have to look out for what Ofgem are doing on their deemed contract review. I'm not sure, is Paul still on there?
Paul is still on, so we could invite Paul if there's an update or any comment you want to make on that point, Paul, that would be useful.
I will drop something in the chat now, so it's available to everybody to see.
Thank you.
We had a point again, thanks Paul, that Slido should not be a poll to determine the best policy outcomes. It's certainly not being used for that whatsoever. It's just to get the feeling of the room. There's going to be a formal feedback process which the teacher taught through. So that will be part of the policy outcomes. But of course, feedback of any kind from stakeholders is really important part of that. Slido is purely just there to get the feeling in the room at the time. Still trying to find this question from the pub landlord. If I can't find it, I'll have to take it offline.
Yeah.
Okay. Teachers, anything else you are?
There's as I say, there's a huge range of views that are coming across, different views about the speed of which this whole process could move. But what I'm not seeing is an objection to the process per se. I'm seeing that actually people are questioning parts of it, saying actually where is the kind of the evidence for having this kind of time limit, or how have you come to these conclusions? And I think we will do our best to answer those, but actually nobody is saying to us this is a terrible view of the process, this isn't how it should work at all. So I'm hoping that that is the view, but because I'm not seeing that in the chat, that actually the process itself is seen as a possible solution, but actually how long we've applied for the views to validate them is certainly a challenge, and that's something that we will definitely look at.
There's been a few queries around whether it's going to be mandatory or voluntary, this process, teacher. Do you able to provide some clarity on that?
So we would be aiming to put this into the REC as a process that you have to undertake as part of this. So it would be something that we're looking to mandate. It's only going to work if everybody is doing the same thing. And once you've agreed what a tenancy looks like, this is what a genuine change of tenancy situation is. You then have the evidence that you need to in order to validate that. You should be able to go through this in a process which is agreed, and therefore if everybody follows it, it's only going to work if everybody follows it. If you then start having some people are doing something completely different, you undermine the whole process that we're trying to implement here. So I think it has to be mandated as a requirement that this is what we expect to see. This is what we see as a genuine tenancy. So those definitions are really important in making sure we have a collective shared understanding as to what that tenancy looks like. What do we agree? These are genuine tenancies. Here, change of tenancies, and here we have a list that supports that. Here's our evidence to make that, and then beyond that, this is the process you then apply once you've satisfied yourself that this is a genuine tenancy. So I think from that point of view, if you can work through it in that way, it has to be a mandated process.
I found the question from Lisa. Thank you. That's a good answers to. But the landlord essentially said that one of the kickbacks they're getting from suppliers is that they don't have the authorization to discuss or request the cot between the two tenants. We also had another point made that some suppliers will not accept cot requests from brokers whom they don't have a commercial relationship with. So I think there's probably something we need to take away to teachers to look at the who should be accepting what from whom.
Yes.
That's clearly an important point. And I think we've seen some stuff in the Ombudsman recently around letter of authority through brokers and the requirements that suppliers have. So we'll have to take that away and maybe come back in some guidance notes and come back to the group with our thoughts around who can do what and when. I think that's important.
Yes.
Very good point.
The other question I've just seen that's come up is, will these be monitored as part of the performance assurance work that's undertaken by REC? That is something that we're looking at. I think it's a really important piece, and we know that that could help to identify where there are risks, issues, where improvements could be made. So that is definitely something that we are considering, that it should form part of the performance assurance work that we undertake. To make sure processes are working well, and if they're not, what could we be doing to improve those? So yeah, good question, and we'll definitely be that forward as well.
Great.
Yeah. Still lots of questions coming in. Nice to see. I'm trying to keep up with Slido and chat function.
A question has been raised that saying surely all cot processes sits with the existing supplier. Are we not confusing this with switching? So is it the losing supplier who has to validate it as opposed to the gaining supplier who has to validate the cots?
Okay. I've got some
so just to answer
comments here also on about the timing and making sure that we're giving this sufficient thought and input, and making sure that we're not just rushing into this. So that's also something for us to think about and take away.
To go back to Martin's point around it, what we're looking here is it's the burden of evidence proof will be on the gaining supplier to ensure that the cot transfer is that when they make the request for the transfer of the meter under the change of tenancy process, that they are transferring is being done in a legitimate way. But we'll certainly look at that point, Martin, you've raised, and maybe reach out to you for your thoughts on that separately.
The other thing that's come out quite a bit is debt issues. So not only protection from fraud, but also protection from debt that a consumer may be carrying if they're looking to change supply. So that's another important point, and that is something that is on our radar. We'll definitely be looking into that as well. Don't know if you want to comment any more on that.
We've been exploring the objection of trying to change the tenancies on the grounds of debt. So we will provide more guidance of that in that part of the feedback on the process.
There are large themes coming out of this. So there are certainly things for us to take away. Have we got the right process? Have we given everybody enough time? Have we got the right evidence? What about the fraud risks with those? And that's why we tried to do this primary and secondary list. The primary list should be those things that are kind of, if you like, official documents that you can't forge. That's kind of the go-to list. That should be where everybody should be starting. And the question is it robust enough? And that's something that we can go back and revisit.
Just one point that I've seen here from I think it's from Steve around the performance assurance process being used to identify any risk of fraud in the market, etc. I think one of the things when we spoke to the performance assurance team yesterday was the ability to look at the patterns of COTS, normalize the data in terms of the expected number of green routes, amber routes, and red routes, and then identifying where there is an exception in those normalized figures across suppliers. And where those COTS are coming from, and that way then we, as I said, the data can then be sampled and used to understand where there may be risks of fraud, as you rightly say, Steve. So yeah, we do need to engage properly with the performance assurance team, make sure that we are looking for the correct things, not just should it be a green one, should it be an amber route, but wider COT issues that come from the data we find. So that's a very good point.
Yeah. Okay. So I think probably we can't answer any more questions really. There's still a lot coming in there, and they're, as I say, really thankful for you all coming along today and having the opportunity to get your comments on board early. It's really helpful. As I say, this is only the beginning of the process, and there will be an opportunity for you all to continue to feed into this. And as I say, if you want to speak to us directly, also do drop us a line, and we're happy to chat to anybody. I think I don't know if John Dixon is on the call, and if there's anything, John, that you think that we should have called out that Tim and I haven't picked up, if you wanted to jump on and add anything, please feel free to. If not, I'd like to just thank our speakers for today and for coming along and sharing experiences, and for Paul for coming along and talking about where we are with work with Ofgem. Please do stay in touch. I have no doubt that you will be contacting us and giving us your views. I'm really pleased to see a lively chat, the comments and observations there, and we will be taking those away and collecting them. So with that, I think we're going to draw it to an end. And then thank you all very much. And John's put in the chat that there's a lot to digest and for us to consider. So thank you all very much for joining us today. And you get half an hour of your day back, bonus. So thank you all again. Thanks so much for being involved. Thank you.
Thanks, everybody.
Thanks. Bye.